This is Nightly Business Report with Bill Griffith and Sue Herrera.
Golden sales at the Golden Arches. Appetite for McDonald's was strong, and investors ate up the stock as the CEO solidifies the company's turnaround.
Ambitious deal. Sprint and T-Mobile reach an agreement to merge, potentially reshaping the wireless market if regulators allow it.
Feeling crabby? Why one industry is getting pinched just as it enters its busy season. Those stories and more tonight on Nightly Business Report for Monday, April 30th.
And we bid you good evening, everybody. April is now in the books. Stocks finish the day, the month with gains, making the first month that we've seen positive in the past three for the major averages. And it comes despite a pullback in the market today. Stocks were led lower today by the technology and telecom sectors, despite some strong earnings and a number of announced mergers. When all was said and done today, the Dow fell by 148 points. It was up 180 at one time, but it finished at 24,163. The Nasdaq was down 53 points. The S&P dropped 21. But as we mentioned, all the major averages were higher for the month.
Those strong earnings we just mentioned include McDonald's, which was a bright spot in the market today. The world's largest fast food chain served up a strong quarter, and it did it in part by raising prices. That raised the stock price by more than 5.5% in trading today. Kate Rogers takes a look at how McDonald's is putting the gold back in the Golden Arches.
McDonald's turnaround is going strong under CEO Steve Easterbrook. Both earnings and revenue topped analyst estimates, and global same-store sales blew by forecasts, up 5.5%. Menu price increases on some items got customers to spend more. But McDonald's was also able to lure in customers with deep discounts using its $1, $2, $3 value menu, $1 McCafe beverages, and $2 McPick 2 promotions.
The company really needs a national value platform, and that's what we see in the $1, $2, $3 platform. That's going to be what drives traffic to the restaurants, get people in the door. But ultimately what we're seeing is multiple items being purchased there, and that the average transaction size goes up. Now, our company is taking its price point up on some of the higher end, more premium items, and I think that's a good balance.
Other changes include a move into fresh, not frozen beef for Quarter Pounder burgers, set to reach 14,000 locations in the U.S. by early May. The company has been working to upgrade its menu and be more transparent about ingredients in recent months, even ditching antibiotics from its Chicken McNuggets and removing soda from Happy Meals.
The idea that the company is being more transparent and moving to more authentic and natural products, I think that's really resonating with U.S. consumers and probably hasn't got the amount of attention it deserves. That's something that the U.S. consumer has definitely, we've seen a shift, and the U.S. consumer certainly demands that at this point, and I think McDonald's is meeting that.
Beyond that, McDonald's is working to modernize its restaurants with table service and kiosk technology in 3,000 U.S. locations, accelerating the rollout with its tax savings. Its partnership with Uber Eats, with delivery available in more than 11,000 restaurants globally, also contributed to growth in the quarter. For Nightly Business Report, I'm Kate Rogers.
Let's talk more about what's working for the fast food chain and what may lie ahead. Joining us tonight, David Palmer. He's Managing Director and Restaurant and Food Analyst at RBC Capital Markets. Thanks for joining us tonight, David.
Oh, happy to join you.
And actually, sales overseas were better than they were in the U.S., weren't they?
They were very strong overseas. They've bundled together many of their lead markets in a segment, and those include some of Europe, Canada, Australia, and those markets had 8% same-store sales growth, so extremely strong. Many of those markets are doing the stuff that the U.S. will be doing or is doing now. They're essentially seeing the future there with many of the upgraded assets and food, and they hope that's where McDonald's USA is in 1 to 2 years.
David, you know, the $1, $2, $3 meal, what impact did that have on its results today? And you say one of the things that you were watching very closely was so-called check growth. What does that mean, and why did you like it?
Well, they rolled out a new value platform, the $1, $2, and $3 menu, and that menu was arguably not quite the success that they were hoping it would be. They said it was within expectation, but their traffic was negative in the quarter. Perhaps that value platform will build in popularity over time, and it'll help their traffic trends from here, particularly as they add some of the premium items and the upgrades that they're going to be doing. For instance, they're going to be doing fresh quarter pounders, hot off the grill, made to order burgers, and that's really tested great. And we're hoping that by the end of the second quarter, they'll have the benefit of both traffic and check. But for now, this 1, 2, 3 menu has had mixed results, and it's been causing the stock to bounce around a bit in the near term.
Fresh beef, more transparency on the ingredients there, electronic payments. They've upgraded the stores, all to try and beat these upstarts that have been doing this anyway in the fast food business and the fast casual business. What remains to be done for McDonald's now?
Well, they're going to finish this off because they're doing about 1,000 experience of the future restaurants. All these digital conveniences are being added at about 1,000 restaurants per quarter, and that's going to be done over the next 2 years. By the end of 2019, the large majority of restaurants, or over 12,000 of the 14,000 in the U.S., are going to be done at that time. And at that point, these guys are going to have a lot of digital conveniences, both ordering wherever you want, but also getting it wherever you want with the delivery back home. And this is going to make them ready for the Amazon future that we're seeing, which is, of course, that people want to be able to get their food at home. And they also, with the millennials hitting their family years, they want to have those real ingredients. So this is really about McDonald's preparing themselves for the next generation.
You mentioned the fresh food. That brings us to fresh beef, and they're launching it at kind of the beginning of the end of spring, beginning of summer. What is the risk of that particular move, if any?
Well, the risk is going to be on the operations side because they are truly making this. They're going to call it hot off the grill, but it's really going to be cooked for you. And by being fresh, it has less cook time, but still, that's 90 seconds or so. And you can imagine them telling you to pull up to a curbside lane if you're in the drive-thru if it's not quite ready. What happens if 3 or 4 of those orders come in succession? So that an operations challenge could happen, but that would be a rich man's problem if they're having just too much of this being ordered, because that's a nice premium product. Right. And for years, one of the problems has been their premium side of the menu not doing as well as the fast casuals.
Before we let you go, I can hear the shareholders out there. They like what they hear right now about all the fresh beef and things, but they care about the dividend. Is it going up, do you think?
Oh, that's actually pretty good news for these guys. Their CapEx, their capital expenditures, are actually in an elevated clip for the next 2 years, which will keep their dividend growing with earnings. But after that point, you could see a nice step change in the dividend. So for long-term shareholders, this is going to be a nice dividend story over the next three plus years.
David Palmer with RBC Capital Markets. Good to see you. Thanks for joining us again.
Thank you.
As we mentioned earlier, the telecom sector suffered a sharp pullback despite T-Mobile's agreement to buy Sprint for more than $26 billion. On Friday, we told you a deal was near, and today it was made official. But Wall Street appears a bit skeptical that the deal will actually get federal approval. Sprint shares fell 13%. T-Mobile was also lower. Julia Borston has more.
T-Mobile is buying Sprint for an all-stock deal worth $26.5 billion. The third and fourth largest wireless companies together creating a giant which will be called T-Mobile and will have over 120 million customers. T-Mobile CEO John Legere, who will run the combined company, saying this deal will allow it to truly compete with the even larger AT&T and Verizon. He says that'll be a good thing for consumers.
Take that competition and supercharge it. Put it on faster speeds, bigger scale, bring lower prices. Take that. My commitment, Marcelo's commitment is if you like that competition before, you're going to love what's coming with this one.
But the merger is not a sure thing. Consumer groups caution that a Sprint-T-Mobile combination would harm consumers by reducing competition. And the Department of Justice is likely to take a hard look at the implications of the deal.
I know regulators are going to look at this in 4 to 3, and people looking at their wireless bills that are going higher. There's been price increases. Promotions have been down for the iPhone. It doesn't look like a competitive market right now, and that's what the regulator may focus on.
But Sprint CEO Marcelo Claure, who will serve on the board of the combined company, says they'll argue to regulators that the deal will create thousands of jobs and is necessary for the U.S. to catch up with China, which is ahead with next-generation 5G wireless.
What makes this merger unique is we're set to build the world's most advanced 5G network. and the combination of our companies allow us to do that. And we made a commitment that few people make, that we're actually going to offer the best product, best services at the lower prices. So we plan to make this market more competitive.
Still, there are big challenges ahead. The government blocked a merger of AT&T and T-Mobile back in 2011. And in 2014, Sprint and T-Mobile abandoned a previous plan to combine. But the two companies are hopeful the regulatory environment has changed, saying they're hoping the deal will close in the first half of next year. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And Sprint T-Mobile was not the only deal announced today. You had Marathon Petroleum saying that it was buying rival Endeavor for about $23 billion. That will create the largest American oil refiner. Shares of Endeavor rose by 13% today, while Marathon was up a fraction. And then there's Walmart, which is selling its UK supermarket business for about $10 billion. News of that deal sent shares of Walmart up more than 1%.
And that's not all. Marriott Vacations Worldwide is buying timeshare operator ILG for $4.7 billion in cash and stock. Shares of ILG rose 4%, while Marriott Vacations fell nearly 9%. And logistics company Prologis is acquiring smaller rival DCT Industrial Trust in a nearly $8.5 billion all-stock transaction. Shares of DCT climbed 11%, while Prologis shares were off 2% on the day.
Inflation hit an important milestone last month. The Federal Reserve's preferred inflation barometer rose 2% from a year earlier. It is the first time in more than a year that the so-called price index for personal consumption expenditures, or PCE, achieved the central bank's target. Economists say that the latest report offers fresh evidence that the long economic expansion is finally lifting consumer prices.
Not only has inflation hit a milestone, but so has the economic expansion. And that could be good news for the stock market. Steve Leisman explains.
The current economic expansion turns 106 months old, and tying it for the second longest in U.S. history. When this expansion began in 2009, following the deep downturn from the financial crisis, the iPad was still a year away from being released. At 8 years and 10 months old, the current upturn ties with the expansion that ran from 1961 to 1969. It's almost twice as long as the average expansion, but it has another 14 months to go to break the record held by the economic boom that ran from 91 to 2001, but of course, that didn't end well. Stocks began rallying a few months before the expansion started and have continued rising. They accelerated to the upside with the election of President Trump, but have hit a spot of volatility of late. In the 61 to 69 upturn, stocks gained only about 18%. They surged 244% in the 91 to 01 expansion, but they're up more than 180% so far this run. This has been a growth run like no other. Inflation has averaged about half the rate of the typical expansion. Unemployment has run higher because it surged in the recession. It's now come down to the lowest level since 2001. And growth has averaged only half the level of the average expansion. Amid it all, the Federal Reserve has kept rates well below the level that prevailed in other upturns. So will it last? Rates remain low, but now they're rising. Tax cuts could extend the economic expansion, but deficits are rising as well. Banks are well capitalized, but asset values are high. Most economists think the expansion will continue and even take a run at being the longest on record. But it's shortly after that, later in 2019 or 2020, when many worry that bad luck or the excesses born of good times or even just time itself will catch up with this 106-month-old upturn that has not yet shown its age. For Nightly Business Report, I'm Steve Leisman.
And the Federal Reserve begins its two-day policy meeting tomorrow. The central bank is widely expected to keep interest rates steady at the conclusion of the meeting on Wednesday.
Time to take a look at some of today's upgrades and downgrades. We begin with Wells Fargo's rating, which was raised to outperform from underperforming Macquarie. The analyst there cited an attractive stock valuation following a challenging few years for the bank, which is certainly an understatement. The price target, $61. That stock finished the day fractionally lower at $51.96. Spirit Airlines saw its rating raised to overweight from underweight by J.P. Morgan. The firm cited valuation as well and a more favorable overall cost structure amid rising fuel prices. That price target now at $46. Shares of Spirit rose 23 cents to $35.72.
That same JP Morgan airline analyst lowered his rating on JetBlue to neutral from overweight. The analyst cites the lack of progress in talks with JetBlue's pilots union. The price target is $22, and shares were lower at $19.19. Colgate-Palmolive's rating was cut to equal weight from overweight by Morgan Stanley. The analyst cites a slowdown in its emerging markets operations. The price target there is $69. The stock was off 2% to $65.23.
Still ahead, why home buyers are not necessarily springing into action during the spring selling season.
Oil prices rose today after Israel's Prime Minister Benjamin Netanyahu claimed to have new evidence that shows Iran ran a secret program to produce nuclear weapons.
These files conclusively prove that Iran is brazenly lying when it says it never had a nuclear weapons program. The files prove that.
Some say the Prime Minister's information is not new, but the comments sent oil prices higher to above $68 a barrel. President Trump has until May 12th to make a decision on the Iran nuclear deal.
The Department of Justice is urging the judge overseeing the AT&T Time Warner antitrust case to at least consider alternative remedies if he does not block the proposed merger. During his closing arguments today, that attorney for the government said that the judge should consider allowing AT&T to buy parts of Time Warner, but not the Turner cable television channels. He also implied that other structural changes to the deal could be made to soften the impact on consumers.
Boeing is one of the best performing Dow stocks this year, and it was the top performer in the blue chip index last year. Now that company is looking to soar even higher, not simply by delivering more planes and fighter jets or rockets. Instead, Boeing is targeting new opportunities. Phil LeBeau has more.
Boeing CEO Dennis Muilenburg had plenty of reasons to smile at the aerospace giant's annual meeting in Chicago. After all, production of commercial airplanes is running at a record rate, and defense orders are rising. But it's the global services business, which includes everything from supply chain management to digital services, that Muilenburg is keen to develop.
We're continuing to focus in a few primary areas. One, again, is to grow our services business, so where we can find strategic acquisitions that complement our organic investment in services. That's a top priority.
The service business made up just 16% of Boeing's record-setting revenue last year. It's far smaller than the defense and commercial airplane operations. And those two divisions continue to grow at healthy clips. In fact, Boeing's 737, its most popular commercial airplane, has a backlog that is still growing. So Boeing may have to increase production even more than already scheduled in order to keep up with demand.
The general trend here is upward pressure, and we believe we have the capacity to go higher if we need to.
The challenge for Muilenburg and his team will be developing and acquiring new businesses while making sure the traditional operations don't miss a beat. If Boeing can do both, then the stock is primed to soar even higher. Phil LeBeau, Nightly Business Report, Chicago.
Arconic slashes its profit forecast for the year, and that's where we begin tonight's market focus. The metals maker said the rise in aluminum prices caused by new import tariffs would cut into earnings growth this year, but the company does see revenue rising at a faster clip. For the latest quarter, by the way, Arconic topped expectations, but investors clearly focused on that weaker profit outlook, sending shares down 20% to $17.81. Meanwhile, AK Steel topped expectations as higher selling prices helped offset a decline in shipments. The company said it expects to sell more product this quarter thanks to rising demand for steel from the automotive and manufacturing industries. Shares of AK Steel fell 3%, though, to $4.59. And strong demand for Botox led to an earnings beat for drug maker Allergan. Company also increased its full-year outlook at a time when this company's future remains unclear. In an effort to improve Allergan's stock price, the board has been considering an array of options, including selling units, acquisitions, and even splitting up the business. But today, the CEO said he was not a proponent of a major strategy shift, and shares fell as a result by 5% to 153.65.
Diamond Offshore said an increase in new drilling contracts helped it report a smaller than expected loss. Revenue fell, but that also beat estimates. The company also said it's seeing some persistent headwinds in its floating rig division. Shares fell more than 3% to $18.39. Weight loss company Nutrisystem topped expectations after the bell. The company said results were helped by strength in its direct-to-consumer business. The company also raised its full-year guidance. Shares initially popped in after hours and also ended the regular day up 1.5% to $29 even. Bill?
Sue, the number of signed contracts to purchase existing homes barely budged in March, and that was before the rise in mortgage rates. So what will the rest of the spring market look like, especially for the youngest of buyers? Diana Olick reports for us tonight.
March was the official start of spring, but home buyers didn't exactly spring into action. Pending home sales, which measure signed contracts for existing homes, were basically flat compared to February and 3% lower compared to March of last year, according to the National Association of Realtors. It was the third straight month of annual declines. The realtors continue to blame the severe shortage of homes for sale, as well as weakening affordability. Sky-high prices have more borrowers putting less down on their mortgages. After holding steady for 2 years, the share of conventional loans backed by Fannie Mae with down payments of less than 10% rose last year, and the expectation is it will move even higher this year.
I think we are beginning to see that people are struggling to come up with down payment and hence going for the minimum that is needed.
Millennials are getting hit hardest, having to stretch their budgets the most because there are so few entry-level homes for sale. Millennials were the primary drivers of homeownership last year, but fell back in the first quarter of this year.
American workers are looking for affordable homes right now wherever they can find them. It has become a real crisis.
Now they're facing higher mortgage rates as well. The weak March sales numbers came in even before rates jumped at the start of April. Kelman says maybe higher rates will cool demand and actually help.
If there were 2 buyers for every house instead of 3, it might actually be healthy for the market.
Home prices usually lag sales by a few months, but sales have weakened for a while and prices just continue to surge higher in this cycle. This supply crisis is now bordering on historic, changing the rules of how housing generally works and pushing more potential buyers out of the market altogether. For Nightly Business Report, I'm Diana Olick in Washington.
Coming up, a shortage of workers is leaving one industry feeling pretty crabby.
Detroit is no longer under state oversight, allowing the city now to regain control of its finances. The decision by the Financial Review Commission comes more than 3 years after the Motor City emerged from the largest municipal bankruptcy in U.S. history. City officials recently reported 3 consecutive budget surpluses.
Well, as the weather gets warmer, you can bet that the crabbers along Maryland's eastern shore are preparing for their big season. But this year, they're facing a major obstacle: not enough workers because of tighter restrictions on immigration. Elon Mui has our story.
Crabbers have worked the docks here on Hoopers Island, Maryland for generations, hauling in live crabs and picking steamed ones. To get that famous jumbo lump meat, GW Hall relies on about 24 women from Mexico to pick it by hand. The workers are here on temporary H-2B visas. Owner Brian Hall says he was lucky to get their paperwork approved. There were so many applications, he had to enter a federal lottery.
We got lucky. We got our visas, H-2Bs. Without them, we'd be out of business. We'd have to shut our doors.
That's what happened just down the street at Russell Hall, where instead of cracking claws, all you can hear is the ticking of the clock.
As you see, we have an empty picking room. Nobody here.
Harry Phillips runs this seafood plant, but he's not sure for how much longer.
This is a killer. We are starting a new building, knowing we were going to get our workers. We've always gotten them in the past. And right now, I could almost jump overboard because what am I going to do?
Businesses here say they can't find locals to take these jobs. The work can be grueling. The women protect their fingers with tape, and the positions only last a few months. But one of the country's biggest labor unions says that argument doesn't hold water.
What you have is employers who need to get approval for the visas very early in the year, claiming in January, I can't find someone who wants to do this job in the summer. And then they bring in foreign workers, and then when Americans go to look for the job in the summer, it's, oh, well, I already have people, so you can't apply.
But out on Hooper's Island, Aubrey Vincent has already invested more than $50,000 in new equipment for workers who may never show up.
Everything pretty much in this area is on hold, including we've got a boiler over in this area that we had purchased in order to increase our capacity. Unfortunately, now we've also put a hold on this.
The Department of Homeland Security says it does plan to increase the number of visas next month, but we don't know by how many. And the industry is worried it'll be too little, too late. For Nightly Business Report, I'm Ilan Mui at the seafood market in Washington.
Finally tonight, as expected, it was a record weekend at the box office. Avengers: Infinity War pulled in an eye-popping $630 million worldwide during its debut, giving Disney the largest global and North American debuts ever. The movie opened almost everywhere over the weekend, except in China. It opens in that country in mid-May.
Here's another look at the day on Wall Street. The Dow fell 148 points. The Nasdaq was off 53. S&P 500 dropped 21. Despite today's declines, the major averages were all higher for the month. And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.